Welcome to The Explainer. Okay, let's dive right in. The market technically went up this week, but did it really have any gas in the tank? We're going to break down everything that happened for the week ending October 24th to see what's actually going on.
All right, first up, the big number everyone looks at, 22,812.52. That's the closing bell for the all-share price index, which is pretty much the market's final score for the week. So what does that number even mean?
So when you put it next to last week's close, you can see we finished a little bit higher. I mean, it's not a huge jump, right? It's more like a tiny step up. So yeah, it's a gain, but it feels kind of lukewarm, like there wasn't a whole lot of energy pushing it forward.
And that's the thing, right? That small gain makes you wonder, were people actually excited about trading this week, or was it pretty quiet? To get the real story, we've got to pop the hood and look at the engine, the trading activity itself.
And wow, look at this. The total turnover, that's just the total amount of money that changed hands, took a pretty big nosedive. We went from over 37 billion last week all the way down to about 29.5 billion this week. That's a lot less cash flowing through the market.
And it's not just the money, it's the number of shares too. The volume dropped big time, from almost 1.8 billion shares traded last week to just over a billion this week. So you've got fewer shares being traded and less money being spent. It's pretty clear investors were kind of sitting on their hands.
Now, to be fair, there's a big reason for this. It's important to remember we had a shorter week, only 4 trading days instead of the usual 5. So that definitely explains some of the drop, but maybe not all of it.
So if trading was down, who was even in the game? Well, this chart tells the whole story. It was basically all domestic traders. I mean, 98.5%. That's huge. Foreign traders, they were almost completely on the sidelines, just watching.
Okay, so we know it was a quieter, mostly local week. So the big question is, where did the money that was moving actually end up? Let's take a look at which sectors were hot and which were not.
You know, even when the overall market is kind of sleepy, there's always action happening somewhere. Money is always moving around, right? It's like a game of musical chairs, showing us what investors are feeling good about and what they're avoiding.
And here's where it gets really interesting. Look at this split. You've got technology and retail doing great, which suggests people are looking for growth. But then you have the classic safe bet sectors like utilities actually going down. It's a bit of a risk-on vibe, which is kind of surprising for such a quiet week.
And the big winner, hands down, was software and services. I mean, a jump of almost 8%? That's the real standout story of the week. Investors were definitely putting their chips on tech.
And on the flip side, you've got utilities. We're talking about those super stable companies having the worst week of all. A drop of over 3% shows that investors were maybe moving their money out of safety and into something with a bit more spice.
All right, we've looked at the big picture, we've looked at the sectors. Now let's zoom in even closer. Let's talk about the specific companies that had a week they won't forget anytime soon.
And wow, some of these are just wild. While the market was taking a nap, these companies were on fire. We're talking about huge, eye-popping gains that just completely ignored the overall trend.
And just look at the top gainer, Lakehouse Printers, up over 76% in 1 week. That is just an incredible run. Of course, it wasn't good news for everyone. For every stock that shot for the moon, another one cratered. The losses for some companies were just as dramatic as the gains.
And leading that list was CM Holdings, a drop of 87%. Just think about that. That's a brutal week, and it really shows you how volatile things can get for a single stock.
Okay, so we've seen the tiny overall gain, the low trading activity, and these massive swings in individual stocks. What does it all add up to? What's the final takeaway?
Basically, here's the story in a nutshell. The market looked calm on the surface, but underneath it was churning. Trading was light, sure, but investors were making very specific choices, moving into things like tech and retail, and away from safe bets like utilities. It was a week of quiet rotation, with a few spectacular fireworks for individual stocks. So, that's what leaves us wondering about next week, right? It feels like the market is just waiting for some big news to really get things moving again. What's it going to take to get that energy back? We'll be right here to break it all down for you next week.